Good morning, Alex Cole. As the sun rises, welcome to a Go No Go Charts Flight Path Review for Friday, March 19th. How are you doing this morning, sir?
Good morning. Good morning. I'm doing well. I've got the coffee and ready to go.
Excellent. I've had to switch to herbal tea. The markets are giving me a little bit of agita.
Yeah.
Let's dig in and see what our subscribers were looking at since Monday morning. I know that the last several weeks we've had some volatility, we've had some changes in trend. Let's take a step out and look at just a cross asset class heat map, just comparing sort of where the trends are going from a risk on or risk off perspective.
Yeah, absolutely. Seems like every Thursday we have some pretty big moves.
Exactly.
So here's the asset class map. When the trend is in place, it's in place until it isn't. We're still seeing the same things. Equities in a go. Yes, they weakened a little bit yesterday. Treasuries, obviously, a corresponding no-go. Commodities still looking good. Bitcoin looking great again. And the dollar's still managing to hold its own. We'll look at that chart in a little bit.
Yeah, that's maybe the only, what's the Sesame Street song? One of these things is not like the others.
Yeah.
It seems like the dollar should be causing greater headwinds for equities. And certainly we're seeing that play out with emerging markets, dollar strength being correlated to weakness in emerging markets equities. But right now, we're not seeing the normal correlations. We're seeing dollar continuing to hold an uptrend, a go trend, even as equities, commodities, and cryptos are outperforming. Well, let's dive in to the dollar, and in fact, why don't we start with a little longer term view? Let's take a look at the dollar on a weekly basis.
Yeah, this is the weekly dollar chart.
We're still looking at the cross asset class heat map.
Technical difficulties on a.
It's early, Alex.
Early on
no problem.
Morning. 1 second. Yeah, you can
early on,
to let your inner comedian out now and tell some jokes while we're waiting.
Early on a Friday morning, wasn't that like a 70s R&B song in an Arby's commercial?
It should have been if it wasn't.
There's that weekly chart. Looking good.
Yep. So there's the weekly dollar chart, and very interesting because we've been talking about the dollar strength in the context of a larger down move or dollar weakness, right? So the overwhelming trend has been a no-go back since last summer, and we've been talking about the current dollar strength, but in the context of that. But it's interesting now. We've had, what you could see is a break above that downward sloping resistance trend line. We've seen a slightly higher low from in the recent sort of 3 or 4 weeks. And we've had multiple squeezes on the chart, which have all broken to the downside. And this one is gearing up potentially to break above zero out of the squeeze. So there's a few bullish, we like to talk about going through your checklist. There's a few things happening that we might be ticking off the boxes to indicate that perhaps there's some more bullishness than there has been since last summer. But, while those bars are still pink and purple, long-term trend is still a no-go, but there is some change creeping in on the weekly chart.
Absolutely. So we're still seeing pink and purple no-go bars. And Alex, just take a second to explain the concept of that go no-go squeeze that's happening in the lower panel above the oscillator line. What should investors be looking for when they're seeing that creep up on their chart?
Yeah, the squeeze is the climbing grid that's been added to the oscillator here. So the go no-go squeeze, the idea behind that was to bring in an element of volatility analysis to the go no-go charts, again without overwhelming the chart itself. So it's thrown onto the oscillator panel. So you still have your one oscillator panel with the price, the go no-go trend on price. But the idea is, if you think about a volatility squeeze, you think about reduced volatility, you think about markets consolidating or taking a period to cool off. When that happens, the momentum indicators or any kind of technical tool that tracks price volatility and price swings will most likely go into a neutral territory for them. So if you think of something like RSI, perhaps the most used technical indicator, when it's in a strong trend, it will move into those areas of overbought or oversold. So in this case, in a no-go trend, you'd expect momentum to be excessive to the downside on every price leg down. But when those counter trend rallies happen, the momentum will cool off and the oscillator will go into neutral territory. So when the go-no-go squeeze was built, the idea was to display or reflect when those momentum inputs went into neutral territory by allowing the oscillator to fall or rise to the zero line. So whenever there is neutral momentum, the go-no-go oscillator will be at zero, and it'll usually bounce off zero or get rejected by zero, depending on the trend it's in. When it rides the zero line, we like to call it riding the zero line, then that's significant because that means that there's been reduced volatility, neutral momentum readings for an extended period of time. So the go-no-go squeeze tries to identify that and display it with this climbing grid. So when that volatility is reduced for a longer than normal period, that's when the squeeze starts to build. And so on this chart, you can see sort of three cases of the squeeze rising to extremes, meaning that every time there has been a pause in the trend and volatility has, we've seen volatility reduce, we've highlighted that with the squeeze. And you can see right at the very edge of the chart, the squeeze has fallen, has dropped, the grid has disappeared back to zero, and we see that oscillator trying to edge into positive territory.
Very good. Yep. And the longer that stagnation period occurs, where there's no decisive momentum in one direction or the other, the tighter the spring is coiled, so to speak. So perhaps the more volatile the move will be out of that volatility squeeze. I
had a friend who always used to talk about squeezing a tube of toothpaste.
When you finally take the cap off, your little sister.
Analogy, yeah.
Wonderful. I'm really glad I didn't grow up with this guy. Let's dive in a little bit. We're seeing that constructive element in price on the far right-hand side of the chart on the weekly chart. Let's switch over to a daily chart and look at a little more detail on that constructive behavior.
Yep. So this is a very similar look to what we've been talking about for weeks now. We had that down channel broken. We had the divergence from the oscillator. The oscillator then was able to break above zero, and then we entered the period of trying to establish a go trend, which was unsuccessful, obviously, the first couple of times. But then in this last move, it's rallied sharply on heavy volume, set a new higher high, which is very important, and a higher low, and now is consolidating above levels that should be support. So before, when we tried to get into the go trend here, we were very quickly pulled back to levels that were part of the no-go structure. This time we've had a sharp rally and a pullback, but it's at levels that are still elevated. So a little bit different. And now we're watching very closely the zero line here to see if the oscillator can this time stay above zero, find support, rally into positive territory. And then if that's the case, perhaps, another price leg higher. If it breaks below zero, as it has done so many times before, then we'd expect the go trend to struggle going forward. But
and it's not to say, for equity investors watching this, that a rally in the U.S. dollar is an immediate reason to run for the hills. No. For everybody who is a macro analyst, we certainly look for the weakness in the dollar as a tailwind, as something that helps move those commodities trends forward. We're gonna take a look at the equity sectors of the S&P. And certainly we could see a strong dollar causing further rotation, but it certainly would not be a sell signal. It's just a macroeconomic tool to look at. And for those of you who are currency traders, I know you are watching this quite closely, and certainly go-no-go charts would highlight when that trend has successfully changed. So let's dive in, Alex. This is a go-no-go rel map, a relative strength ratio of each sector to the S&P index, and we're looking at the go-no-go trend methodology on that ratio chart. So tell us a little bit about what jumps off the screen for you here.
Yeah, nothing has significantly changed since the last time we looked at this. The materials sector we were talking about last week joining the fray, excuse me, and that has continued. We still have strong trends, although weakening a little bit in energy this week, but we still have the go trends in energy, financials, industrials, and communications. So those are still the 5 sectors that are outperforming on a relative basis to the S&P. So if you've been positioned in those for the last several weeks based on seeing this kind of rotation, those are still the sectors that we're seeing leading and showing outperformance.
Absolutely. Strength in the cyclical sectors makes perfect sense, as many of our viewers are probably out there getting inoculated to the coronavirus right now, this week and next. And certainly we have seen that the reopening of the traditional economy is pulling the emphasis away from just the tech sector, which had led throughout the post-COVID crash in 2020. And now we're seeing a real emphasis on materials, industrials, freight lines, manufacturing, as some of those segments of the economy come back online. And obviously, if they are drilling in the ground for more oil to burn in the factories, then the banks are going to do well lending the money to those who are pulling it out of the ground. So that makes perfect sense. Let's look at a couple of examples that were suggested for subscribers on Monday as potential trends to keep a look at this week. Speaking of that more traditional economy, why don't we take a look at Kinder Morgan? It's an oil and gas pipeline company. KMI is the ticker. And I think we're back on the dollar chart. Perfect.
Yeah, it just took a second there.
No problem.
Heavy Wi-Fi usage with all of the kids work school from home and all that,
I do know about that. That's right. We'll only be here about half of the video. The rest of it will be streaming your teacher. Yes. Let's take a look first at the weekly version of Kinder Morgan, sure. and take a look at the longer term view.
Yeah.
There we go. Look at that. Go, no go, squeeze.
Yep. So the weekly, we've been seeing a lot of this kind of pattern, obviously, with what happened last March. So we're seeing a lot of long-term bases being formed, right? A lot of these, we've seen a lot of rounding bottoms that some people are trying to find and call, cup and saucers, depending on, you have to be reading the textbooks to know if it's actually a cup and saucer or not. People are always texting me, is this a cup and saucer? I'm like, well,
does the jargon really matter?
Technically, no, but it is some sort of basing pattern, right? And I think that the thing is that you're looking for the market activity underneath these patterns and underneath the charts that dictate what you can see anyway. So cup and handle or no cup and handle, you are seeing long-term basing patterns in these companies that are have really taken a hit, but that are now perhaps positioned to perform well going into the rest of the year as the economy reopens. And so this, you could call it an ascending triangle if you want to put the lines on here. It wouldn't have completed yet, but whatever you are thinking this is, long term, we're seeing higher low, buyers coming in at higher prices on the weekly chart, and we're seeing this finally this movement out of the no-go that was caused by the last March into more recent go trends on a longer term perspective, and it was initially a go that couldn't hold, and then it was a go that was aqua and weak, and now it's strengthened to the brightest blues over the last 3 weeks. So this is a nice looking longer term early bullish recovery that you're seeing in KMI.
I think what's fascinating about the Go No Go charts tools is that you've seen the breakout in the oscillator on heavy volume that preceded a change in trend, multiple retests, finding support at the zero line, before resurging again, followed by that trend change and the move higher in price.
Yeah.
So the interplay, I think, between the tools is really helpful in giving somebody a leading indicator, a forewarning of trend change.
Yeah,
It's nice to see that.
there's literature written on technical analysis everywhere that we teach and we study that is about that idea of you need to see multiple events happening. Like if you're talking about divergences, there's a lot of literature written about the first divergence can often be a fake out in a strong market, but if you see two divergences, so here, what the nice thing about the go-no-go charts is that oscillator leads, and it often that retest of the zero line, and when you get that go signal, but you then see another confirmed retest of the zero line and not going back below zero, and then the go again, it plays well with the literature that we read about that kind of thing. And so hopefully, these kinds of elements are in the chart if you know how to read them too.
Absolutely. So we've looked at this long term. Let's go back to the daily Kinder Morgan chart and see what investors experienced this week. Obviously, subscribers to Go No Go Research got this on Monday, and now we're sitting here Friday morning, March 19th, and it looks like the week has played out pretty well.
Yeah, it's been a rough end to the week. This has moved down since Monday, but we would still look at this as a nice setup, right? So right now we've got the oscillator at the zero line, so we will be looking to to take note of whether or not the oscillator finds support here. If it does, we'd expect a move back higher and a potential low risk entry for
adding to positions. Yeah. Absolutely. Yeah. Yep. Kinder Morgan Incorporated, oil and gas pipeline provider, definitely a part of the traditional economy and a cyclical name that's starting to outperform. Let's look at another favorite. Can you pull up F, Ford Motor Company, and let's see how our good car manufacturers are doing.
Yeah, Ford has been a wonderful looking chart. Let me just turn on some of the.
And
I just wanted to bring that up just to highlight the low risk trend continuation icons, Tyler, that you see every time you're in a trend and the oscillator bounces off zero. If you want, I can change the squeeze back to the oscillator if you want to just see the zero line interaction. But these green icons highlight those situations where go trend is in place. We've seen some cooling of momentum, and then when it rallies back off the zero line, you get the green circles. I'm sure a lot of our viewers are familiar with those by now, but just wanted to throw those back on there.
Absolutely. Yeah. The whole idea of data visualization is bringing the most important information to the user quickly, and certainly a re-entry, a trend continuation in the spirit of trend following. One of the hardest things, simple to understand, but very difficult to execute, is to stay with a security that is in a strong trend. And certainly those reinforcements when the oscillator jumps back into positive territory after testing the zero line, finds that support, just reconfirms that we've got perhaps a period of consolidation that's ended. We're ready for the next price surge. Yep. Really great set of tools there.
And interesting, the last few days rallied into the end of the weekend. We've seen a heavy volume on those few bars, and actually now another low risk entry icon. So.
And again, it's Friday morning pre-market, so
there'll be another bar today. Yeah,
we'll wait to see how things round out through the end of the week.
Yeah.
But switching away from the industrial economy, let's if you don't mind, pull up a chart of Bitcoin, BTCUSD, and let's take a look at America's favorite cryptocurrency, probably the world's favorite, certainly by market cap. Because I think the concept of go no go charts is extremely well articulated in the digital asset space, and we've been writing in go no go research for months, since early 2020, just about the appropriateness of allocation to digital assets. So there we're looking at the daily, and we've gotten a lot of attention for Bitcoin as many analysts are pointing out just how high the next measured move could take individual coins for the next level. So what jumps off the chart for you, Alex?
Yeah, it's the same. It's the same with, like you said it. I don't know how many times, Tyler. Probably I couldn't count them since we've been chatting over the years. But
well, I talk a lot. So.
Well, but always, when the words are good, it's okay, right?
Okay, good.
But the idea that you mentioned over and over again to new trainees or new people in technical analysis that one of the hardest parts is staying within the trend. That's one of the hardest things as a trend follower, is to just stay with winners. Mm-hmm. And we've I'm sure you have as well, but I've had multiple people over the last few weeks asking me about Bitcoin when we had that big sell-off last week. Mm-hmm. And check the chart, still a go, oscillates finding support at 0. And then towards the end of that sell-off, I said, well, actually, we're getting a trend continuation icon, and it's pushed us back up to close to 60,000. So this is a different ticker because we're on a different platform. This is BTCUSD, so the pricing might be slightly different depending on what you're looking at. But the idea remains the same. The trend is in place, and so it's a good idea to stay fairly zoomed out. And if you are still seeing your trend conditions being met, it allows you to stay in the trend.
Mm-hmm. I get the unique privilege of hosting a podcast series with some really incredible institutional investors, and it was pointed out this week, a recording that's going to come out in April, just that Bitcoin's parabolic move at the end of 2017 has not destroyed the digital asset. And so you look at the South Seas bubble, the tulip mania, parabolic moves ahead of major crashes. It tends to be the death knell for that asset, for that security. But what we're seeing right now is that Bitcoin has recovered from the collapse after that parabolic move at the end of 2017. It's taken a couple of years, and now we're pushing to, we're beyond all-time new highs. We're pushing to extreme allocations, extreme valuations, and much higher prices. So I guess the lesson there is that there's something durable about Bitcoin for sure, that it could recover from a cracked parabolic move. And so I think for trend followers, go charts pointing out those continuations, making sure that folks don't get jittery when we get up to extremely high levels. It certainly gives me a little vertigo at some of the prices we're at here, but you stay with it until the trend breaks. Yeah,
I mean, we aren't. I am absolutely not a fundamental analyst or somebody that puts too much stock in news at all. And I really do try to watch the charts. And I think that there's a lot of value in blending all of those things together. But when you look at the chart, you see what you see. But if you do listen to what's happening, like you said, there is becoming some widespread adoption, and there is something there that is becoming a durable asset. Like, there was big banks this week saying that they're going to start allowing access to Bitcoin, and there's definitely it's not the fringe exciting new thing that it was. And so it is definitely something that is more durable, and it's now sustaining these prices. And it's not a mystery anymore. It's an asset that is being used and traded and talked about by people in mainstream, not just finance, but just it is a known asset now. So,
it also at the Thanksgiving table in 2017, I do remember my mother in her 70s asking me about how much a Bitcoin is worth and whether she should get some, which is a great way to top tick.
And you said yes, yes, Granny, buy 10, right, Tyler?
I was like, Granny, give me your retirement account. I'll take care of that for you. No, I do think that there's something durable there, and certainly the charts are telling that. So to round out the story of blockchain technology and how things have performed, let's take a look at the last name from Flight Path Monday morning, and that was RIOT, RIOT, just a blockchain services company. That and I think we're looking at the Bitcoin chart again.
Yep, just waiting.
Oh, okay, no problem.
Just having a little sip of coffee.
Yeah, very good. So is the charting platform.
There you go. It's there we go. It's just
wonderful.
There we go. So this is RIOT, and I think we mentioned this as a potential catch-up play. I think if we're looking at this chart compared to Bitcoin, it's not at those prior highs yet, and we did get a re-entry actually triggered on Monday. So after this went out, there was a low risk trend continuation icon triggered on Monday, and then we had a little bit of an up and down, but we are higher now from where that happened. So given that the oscillator is now sort of significantly broken back above zero, has fallen and then has rallied again, you could suggest that a retest of RIOT's prior highs at close to $80 would be reasonable.
Yeah, that measured move higher. And that's really what we're looking for when a sector or an asset class is outperforming. You look for names that are structurally there's a lot of constructive evidence of a trend emerging, but maybe haven't completed those moves yet. So this is a great name to keep an eye on, and we'll be watching how things wrap up today. Had a very strong down day, 77% down on Wednesday, and continued volatility yesterday. So thank you very much, Alex, for walking us through the charts. Nice to see Go No Go on multiple platforms, and looking forward to speaking with you again soon.
Absolutely. Have a great Friday, everybody.
Have a great Friday.